Wall Street closed the third quarter with the heavy losses. What to expect in the final quarter of the year? Let's discuss it together. The benchmark stock indexes went down on Friday in light of the red-hot US inflation data, which paved the way to tighter monetary policy. The Dow Jones lost 500 points intraday, or 1.71% on Friday. The Nasdaq plunged 1.5% and the S&P 500 tumbled 1.51% and closed at a one-year low of 3,858 points. Because of the public holiday in China, the New York pre-market was quiet. The benchmark indexes traded roughly at the closing levels of Friday for the most part of the day. In the early New York session, the indexes went up in confidence, signaling the fragile optimism sentiment among stock investors at the beginning of the fourth quarter. Amid fundamentals, the S&P 500 is expected to trade in the corridor between 3,560 and 3,720. The Fed's favorite inflation gauge, the core PCE inflation index, rose 4.9% in August beyond the consensus. Bearing in mind hawkish policies of major central banks and the fresh EU inflation data, investors could not find catalysts for optimism at the end of the third quarter. Such data puts a strain on the US stock market. Both the S&P 500 and the Dow Jones shed 3% last week. The Nasdaq inched down 0.3% for the S&P 500. September was the month of the sharpest fall for the last 2 decades, and the S&P and the Dow Jones collapsed 9% last March. The Nasdaq sank 10%, the S&P tumbled 6% in the third quarter, the Nasdaq dropped almost 5%, and the Dow Jones fell more than 7%. Wall Street went through a decline for the 3 quarters straight, which is the longest losing streak for the S&P and the Nasdaq since 2008, and the longest quarterly fall for the Dow Jones over 7 years. Now, analysts expect the overall profit for the S&P to grow 4.5% for the whole year versus the 11% rise in the early third quarter. The US stock market has been badly hurt by the Fed's aggressive monetary tightening to combat inflation. The key indexes tried to recoup some losses in the New York pre-market. The stocks of the high-tech giants such as Apple, Microsoft, Amazon and Meta traded in the green, whereas Tesla shares traded lower due to gloomy forecasts. Tesla stock plunged 4.9% following reports about lower than expected deliveries of electric cars in the third quarter. Tesla said on Sunday that it's becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost on the back of a slowdown in the global economy and logistics next. Shares of oil companies are gaining ground today. ExxonMobil and Chevron jumped 3% in the pre-market amid a rally in oil prices. OPEC and its allies are reportedly considering the possibility of the largest contraction in oil output rates since the COVID outbreak. As for the economic calendar, investors will get to know the ISM manufacturing PMI. Fed's policymakers such as Thomas Barkin, Raphael Bostic and Easter George are due to speak tonight. This week, markets are alert to a series of US employment data. JOLTS job openings, ADP employment change and the non-farm payrolls. Besides, investors will find out the ISM non-manufacturing PMI and trade balance. So, Wall Street is set to trade on the high volatility. The US dollar kicked off a trading week with a modest decline. Its index is taking a breather. It's hovering at around 112 points. The intraday corridor is seen between 111.50 and 112.80. The sterling is under the spotlight today because of its confident revival. The yen is extending its weakness. And the commodity currencies are gaining ground, and in this context, the US dollar is taking a back seat. So the loonie is enjoying support today. The USD CAD pair is moving firmly downwards. It's trading at about 1.3700 now within the intraday candle between 1.2640 and 1.3720. The benefactor of the looney's strength is the news from OPEC, which triggered a rally of oil prices. Crude oil went up following reports that the cartel and its allies could decide on production cuts by more than 1 billion barrels per day. It will be the steepest cut since the pandemic outbreak. Oil prices have been falling for months straight due to the COVID restrictions in China, the world's top energy consumer. This has dented energy demand while rate hikes and the firm US dollar are putting pressure on financial markets. The major oil exporters will nail down output cuts at the summit on Wednesday. Until then, commodity markets are going to trade under high volatility. Insider reports encouraged a rally in oil prices. No wonder the loonie regained some of its losses. The crypto market is trading mixed today. Digital assets traded quietly at the weekend and have not been able to perk up today. Bitcoin has got stuck at around $19,200, unwilling to recover like the Nasdaq and the S&P 500. Altcoins are not poised to develop a rally. Ethereum is drifting higher, trading not far away from $1,300. Solana, Ripple and Litecoin are wavering between gains and dips. If the Fed speakers and fresh statistics, the spring surprises, Bitcoin is likely to trade in the narrow corridor between 18,800 and 19,600 today. If the data and comments agitate the markets, the token might test one of the wide borders between $18,200 and $20,200. InstaForex team is keeping close tabs on financial markets to keep you updated. We wish you always profitable trades and see you online tomorrow.